to In the Zone, brought to you by U.S. Construction Zone, bringing you strategies for success with construction innovators and change makers, including In the Zone peer-nominated national award winners. Here are your hosts, Jeremy and Valerie Owens.
Welcome to In the Zone. I am your host, Jeremy Owens. Thank you so much for being here and tuning in, listening, watching, however you're ingesting. Thank you. We have a really cool guest today. I think if you are like me, when it comes to CPAs, IRS, taxes, all of those words can kind of, I don't know, give you a little PTSD in some ways. It's not our favorite subject in terms of we don't really have time to learn about all tax codes and the changes and these tax credits and R&Ds and all these things that come our way. I understand we're very busy as an industry and as a business owner. It's hard for us to take the time to learn about these subjects. And that's why I wanted to have Justin Rupple on, because this is his industry. He's not a CPA. He calls himself a tax incentive specialist. So looking for all of those ways that we can benefit from already existing tax codes is his game. And he's a wealth of information. And please take a listen, because it could benefit you. And in most cases, it does benefit construction owners and businesses. So take a listen, because I am certain it will benefit you. He's going to talk about the employee retention tax credit. He's going to talk about an R&D program that they have. And he has several others as well that he can help you with. So take a listen. Like I said, I'm also, these things are not my area of expertise. So I wanted to make sure we brought someone on that is an expert. So please help me welcome Justin Rupple. All right, folks, Justin Rupple serves as a tax incentive specialist in his role as regional manager at Business Group Resources. For over 12 years, he has served small businesses, helping them keep more of their hard-earned money in their pockets. He currently lives in Portland, Oregon with his wife and 4 energetic boys. Please help me welcome Justin Rupple. Justin, thanks for being here.
Jeremy, thanks for having me on the podcast with you. I appreciate it. It's great to be here.
Yeah, you're so welcome. As I said before, this subject matter is new to most of us. So, most of the time I'm trying to set up calls with people with information I don't have. So this is another good example of that. Tell me a little bit of how you're serving the construction industry right now.
Yeah, I've been working with a lot of different general contractors, construction businesses, home remodel and renovations, subcontractors, even like plumbing contractors, electrical contractors, basically helping them keep more of their hard-earned money in their pocket. Right. There's some tax incentives and tax credit programs out there that, the government doesn't have a good PR campaign. They don't have good marketing strategies to get out the kinds of things that actually could benefit us, small, medium businesses.
Right. And
so we're out there spreading the word that, hey, there's actually opportunities to recover tax money, keep more money in your pocket. That sadly CPAs that serve small, medium businesses don't often know much about. They don't have the expertise to bring to it. We can get more into that later, but that's what I love to do. Help business owners. They're busy. They got a lot going on, and they can use every dollar they can get.
Yeah, no doubt. Is this a direct result from COVID? I know the PP thing was like the start of this, but is this a result of that, or is something else happening here?
There's a couple different opportunities that I thought would be worth us discussing today. One is the employee retention credit is connected to COVID. That a lot of business owners have dismissed, basically relying on outdated information. The criteria, the details of it have changed through several acts of legislation, and some people are operating off of some of the original information that made them write it off.
Right.
Therefore, leaving potentially tens or hundreds of thousands of dollars on the table.
Right.
And so, but there's another tax credit, the R&D tax credit, that's worth us talking about. That's actually been around for 41 years. It started under the Reagan administration in the early 80s. So it's got a ton of history, and yet so many have never even heard of it, or if they've heard of it, they don't know why it applies to them. And so that's what I get to do, is help business owners understand what opportunities are there for them.
Yeah, and I think that, you kind of mentioned it. CPS, we can't rely on them to stay on top of these things. I mean, they are business owners themselves, but to expect them to know all of these tax codes and understand all of the nuances, right?
Yeah.
That's a big ask. I mean, they change the tax code every year, and to expect them to like read through it and understand it
Oh
all,
my
not
gosh.
only do that, be willing to step out, right, and maybe make a risk and say, hey, maybe you guys should look at this. Most of the time, they're a little bit more conservative, right? They're like, hey,
Yeah, I think there's often a misunderstanding that someone's CPA or accountant is out there figuring out every opportunity for them to save tax money or take advantage of tax credits or incentives. Now, I'm sure CPAs would love to save every business money,
right,
but they are often very good at what they do. They're good at tax document preparation. They're good at making sure you're compliant with tax codes when it comes to your income tax filings and corporate structures and how
right,
that affects tax liability. Most CPAs are wonderful at that.
right,
But beyond that, as you said, the tax code is enormous. No one person, no one firm can do it all, can know it all, can specialize in it. I mean, it's like being angry with your doctor, your general doctor, for not being a brain surgeon. Like
yeah,
the
yeah,
human body is too complex for any one place, one individual to
right,
be an expert at it all. And
right,
so, CPA is like a general doctor. They get the gist of it all. They can handle your regular annual tax filings for income tax purposes, adjustments to corporate structure, things like that. They usually can facilitate that. But there's tax credits and incentives that are highly complex at times, that are often changing, and it's outside the scope of what a typical CPA firm can offer a business. And so that's what I love to be able to do is representing a specialty tax firm. We fill in that gap. We actually don't do normal tax preparation. We don't come in trying to compete with someone's CPA or accountant.
right,
We come in to complement the work they do and bring added value to support them. We have a lot of CPAs actually refer clients to us because they know they can't do what we do, and they know we're not
right,
going to compete with what they do. And so it
right,
complements really well. So to get into, if you mind, I get into some particulars about these tax credits.
yeah,
So your listeners, those that are watching today, can consider like, hey, are these good fits for me? Or is this something I
right,
could benefit from?
yeah,
I mentioned already the R&D tax credit.
yeah,
This is an income tax incentive program that is designed to incentivize businesses for the custom, creative, innovative work that they often do every single day.
right,
In the construction industry, a lot of times I'm talking to business owners are like, how do I do R&D?
right,
Research and development. I read a great little article. It said this. It said it's not only high tech or life science companies with dedicated research departments that qualify for the R&D tax credit. Indeed, most companies don't have R&D laboratories,
yeah,
and instead perform R&D in their test kitchens, on the field, in their wineries and distilleries, or on production floors. Wherever experimentation occurs, R&D may be found. The key to bear in mind is the R&D tax credit is about rewarding applied science, taking the tools of science and engineering and addressing the task at hand. I mean, is it
right,
a general contractor, a construction firm,
yeah,
a custom home builder? At some level, they are applying science into the physical real world to improve or create, build, construct,
right,
renovate something, creating something that previously didn't exist. Now, no one listening today developed the concept of a home, but every one of their homes, every
right,
commercial building they work on is unique and it's custom, and they have to develop custom solutions for how that particular need is going to be met.
hmm,
And there's science and technology that come to bear in that process. There's
right,
design and architectural, there's engineering, and
right,
even with a general contractor that is outsourcing, subcontracting an architect, an engineer, they're
right,
still part of that process, and therefore there's aspects of the related expenses that can be part of the R&D tax credit calculations. And
right,
so there are activities that go on probably every single day, certainly on every single job for every one of your listeners,
right,
that are what the IRS calls qualified research activities.
okay,
And the challenge is to help quantify, or first qualify, like what does qualify, and then help quantify that, because your business owners, they're busy running their jobs, they're busy doing their work, they're not keeping track of what's R&D and what's not. And
right,
that's what's great is we're able to come in and help bring our expertise to develop that. When you consider your CPA,
right,
they can't come in and be hands-on in that way. It's just the way they're structured, the time they have, actually the way they bill. There's
hmm,
an IRS thing called Circular 230 that actually requires CPA firms to bill either flat rate or hourly. So for them to even come in and explore,
right,
how much could be there for you, they have to charge you for that.
right,
And it's expensive because the amount of hours that go into it. And we're able to come in and we provide a free incentive analysis. We can review all of this, determine about how much money is actually on the table for a business owner, so they know what's available to them before they make any kind of a commitment. What's really sad about the R&D tax credit is there was this Wall Street Journal article a few years ago that they estimated about 95% of small businesses that are eligible don't take advantage of it.
Oh my gosh. I'm writing that one down.
That's huge. 95%. Now, this was, I think it was around 2014 when the article was done. It might be closer to 10% now because there are, we've worked with a lot of businesses. The word's spreading a bit. Around that same time, under the Obama administration, the R&D tax credit was made part of a permanent part of the tax code. So literally would take an act of Congress to get this off the books. So it's not going anywhere. And here's the thing. There's this article in Entrepreneur Magazine. They titled it, "How Big Businesses Slash Taxes with the R&D Tax Credit and How Yours Can Too." And they say on here, while the big companies are cutting their taxes by using the R&D tax credit, too many small, medium business owners are just sitting and watching the parade go by. And they say the number one reason business owners don't take advantage of this tax credit is self-censorship. The business owners subscribe to an incorrect and outdated view of what activities are eligible for the credit. There was a time in the 80s and 90s where to do the R&D tax credit, you had to develop or create something new to the world, like a new discovery, a new technology, a new pharmaceutical. Well, we're not typically doing that, And that actually was part of the expansion of this tax credit under George Bush, was eliminating that it has to be a new or improved development, just simply new to you and the work you're doing, new to your client, or improving upon existing services or products or construction. And so there's a lot there. They also expanded it from originally just C Corps could do it. Now S Corps, LLCs, even sole proprietors. So it's very broad, and not every business qualifies, certainly, but so many more do than realize it.
So tell me this from my experience. You talked about new products. So yes, there's always like demos, construction. You're trying to figure out if this is something that you want to tackle as a new product line. So tell me a little bit about, bringing on a new product line for us. We are currently bringing on fire defense services. So this is brand new to us. So this is now the R&D thing. We're meeting with people. We're partnering with them. We're doing demos. There's activity going on, and we haven't even really hit the market yet. So yes, we're spending money on this to see will this benefit us and our clients. That's what you're talking about, right?
Absolutely. There's R&D work going on in that process as you develop this, as you experiment with this, you test this. Because that's the thing is when there's experimentation, when there's uncertainty, when there is financial risk, there's R&D happening. And so, in construction, that happens at so many different levels in so many different ways. And I work with different construction businesses. They all have unique ways they innovate. They all have unique kind of nuances of the particular specialties that they bring to the table, from general contractors, commercial, industrial. I mean, I worked with a general contractor that specializes in large hotel renovations. And he was telling me how they would go through like a Marriott and do 30 rooms at a time and work their way around the building and do these renovations, and he's like, well, how do we do R&D? Like, we get the design straight from their architects, this is like big Marriott, Hilton, And so we're talking and said, so when you go to those hotel rooms, does everything go according to plan? And he's like, well, nothing ever goes according to plan. So who figures that out? Who has to look at it and make the judgment calls of how are we going to do this? Bring in the subs and collaborate and make those in the field on the fly adjustments and problem solving. It's like, well, I'm a part of that, and others. Exactly. Boom. Now it happens at so many different levels. So heavily on the pre-construction side in construction business, design and estimating and surveying, things like that. But also through the entire process, you're regularly dipping back into R&D when different things arise and alternatives have to be considered and expertise is brought in and new data has to be collected. New solutions have to be brought to bear.
Right. Awesome. Yeah, I would like to hear a couple examples. I mean, we kind of talked about this a little bit before. What would an average client of yours, maybe in obviously in the construction
Mhm.
space, what would that look like, and what are you typically helping them with find?
Yeah, great. So this is an income tax credit, and what's really awesome is the IRS actually lets you go back up to 3 tax years and apply this tax credit retroactively. So most often when I'm working with a business, we have 3 years to look at. Right now that'd be 19, 20, 21. We can go back, look at those tax years, potentially apply the R&D tax credit to all three uniquely, resulting in three tax refund checks. Because you're applying a tax credit to a past tax year. That tax was already been paid. Government's got to pay that back to you in a refund, and they have to pay you interest. That's another beautiful side to it.
Okay.
And so, give some examples of the R&D tax credit. I worked with a small residential contractor in St. Louis, Missouri, and they got $40,000 back through the R&D tax credit, the 3-year look back. A small commercial contractor near Seattle, Washington, $67,000 we'll get back from over the last few years.
Wow.
There's another residential contractor local here to me in Portland, Oregon, $86,000 we were able to get back for them through the R&D tax credit.
Yeah.
That general contract did hotel renovations. We're able to get them $172,000 with this tax credit. And then for that one, that was actually a really special case for me because when the pandemic hit, his business almost all but entirely went. And we had a couple jobs he was able to finish out, but the hotels all canceled their contracts. They all said, we don't know what's happening. It's too uncertain. We're not going to invest in remodeling. He was pretty much dead in the water for about a year and a half or so, only really in 22, starting to get new contracts back. And so to be able to call him up, it was kind of early of 2021. It was about a year ago, year and a half ago, call him back up and let him know that we can recover $172,000. He's like, you don't understand what this means to me right now.
That's an answered prayer right there.
We are draining money every single day because we have such little work and we're trying to stay afloat. We're trying to pivot and getting into other lines of work, and this is going to cover that gap for us. That was a big one for me. I love having those kinds of calls to let business owners know what we're getting for them. And then I had a case of a plumbing contractor in Central California. They had just finished going through a really ugly lawsuit with a disgruntled employee and some struggle. It's tough things that went on through that whole process, financially and emotionally draining. And to be able to go through this and bring good news. And for them, we were able to get them $170,000 back. And anyway, it's so rewarding to be able to call a business owner. I mean, I called someone today and told them they're getting $78,000, and they were just like, they were texting me afterwards going like, I'm just floored, they couldn't believe it. They didn't expect it to be that, and of course the amounts can vary and and all of that. Most often when I'm working with businesses on the R&D tax credit, just to give you a sense of even kind of parameters with it, most often we found businesses that are doing around $500,000 to $750,000 in gross revenue per year is kind of the hump where it becomes beneficial to engage in the R&D tax year. Below $500,000, usually the numbers become so more minimal. Doesn't mean they're not doing qualified activities. It's just the way calculations work out that it often either doesn't benefit them or it's very minimal to, or it's just, business owners ask me all the time, like, is this, it's going to give me $500 or $50,000? Basically, they're asking, is this worth my time?
Right.
And it's like, hey, around that $500,000 to $750,000 mark is where it really becomes beneficial and it's worth exploring.
Okay. What about from a profitability side? Because I get that question a lot when it comes to these tax credits. Like, is this based on how much net profit you have, or is this based on?
It's not actually. It's based on, the calculations of the R&D tax credit stem from expenses. You're investing in this developmental kind of work, the design work, the custom work, the innovation, the experimentation, primarily through labor. You're getting paid. Your staff, your contractors, you're paying people. There's also supplies that you might purchase and equipment to do it, but primarily it's labor. And so those expenses are what go towards the complex calculations that generate the credits. Now, then those credits apply against tax liability. Now, with a C Corp, that all stays at the corporate level. And so the tax, if the business isn't profitable that year, they probably didn't have tax liability, therefore the credits won't benefit them, at least for that year. Now the credits can be carried forward to future years.
Okay.
But with an S corp or LLC, those credits pass through to the personal taxes of the shareholders.
Right.
And I worked with a lot of businesses where a particular year the business wasn't profitable, but the owner still got income from the business because he was on payroll.
Sure.
And so he still had to pay taxes on that. Well, guess what? The credits applied to his personal taxes.
Right.
And they also, sometimes they're married and their spouse has another job unrelated.
Right.
It applies to the entire tax liability of the personal taxes of the shareholders.
Right.
So it can still be very beneficial, even if there's a tax year where the profits were minimal or non-existent.
Right.
That's why it's always worth exploring.
Okay. And on the employee retention credit aspect, what are some examples of that? And I guess maybe after that we'll go through like the process of what it looks like.
Yeah, exactly. So this one is a little more simple. R&D, you got to help people understand what it is, R&D, why they do it. There's a lot of complexity to it.
Sure.
The ERC, or Employee Retention Credit, it is a generous stimulus program that helps businesses, small businesses in particular, that were impacted by the pandemic in various ways. One of the biggest things I'm seeing is business owners that are not exploring it because at some point they thought they weren't eligible. And initially, when it first was, the legislation that created the PPP loan, the CARES Act, it also created the ERC in the same legislation early in the pandemic. And initially, they were mutually exclusive. You could only do one or the other.
Oh, that's
well, most business owners I talked to did the PPP.
Right.
It was quick. You can apply it online at a bank, get the funds in a few days.
Right.
They're eventually going to get forgiven. I mean, we were all crossing our fingers. Are they really going to get forgiven? They were,
Yes.
And it was a great deal. And so a lot of people, they heard ERC, well, you can't do both. Well, later that got changed. You can do both. Initially, the criteria was you had to have a 50% reduction in revenue in 2020 compared to 2019. Well, I don't know many businesses hit that hard. Some were, but most haven't. In fact, I'm working with a lot of construction businesses or contractors whose business actually grew during the pandemic.
Right.
And then in 2021, to qualify for those quarters, you had to have a 20% or more reduction in revenue. Well, that's not too, that much compared to 50. Some qualify, some don't. But that's not the only criteria. The other two that often are overlooked, and sometimes I have clients tell me, my CPA told me I don't qualify because my income didn't drop enough. And I said, well, what about these other ways? So my CPA didn't bring those up.
Right.
One is a full or partial shutdown due to government order or suspension of services due to government order. Now, in construction, in most cases, you didn't have to shut your doors. You didn't have to stop working. In most cases, kind of part of what's considered essential workers. So the full government shutdown doesn't necessarily apply, but the partial can. There are some situations where they had office building and they actually had to limit how much space or jobs they couldn't access because of shutdowns.
Right.
There's an extension of that one, the supply chain disruption. And this is where a number of construction contractors qualify under supply chain disruption.
Every single construction worker.
Everyone's impacted by it.
Right, yeah.
Part of the challenge is being able to substantiate it. Now, when you file for it, you don't have to. But if for some reason the IRS, reviews the case, there's a way you got to substantiate. Okay, there's certain products or supplies that have a substantial impact on my business that I couldn't get access to because vendors, suppliers, manufacturers, they were shut down. I wasn't shut down. They shut down, and that caused a supply chain disruption, and I couldn't get the things I needed. And it doesn't have to be everything. It has the cumulative effect has to affect at least 10% of the business.
Right.
Doesn't mean your income dropped by 10. It could be made up for in other ways.
Right.
And it's when you look at, those things we couldn't get, when we look back at 2019, it was at least 10% of our business, the cumulative impact.
Right.
So that's, I'm working with construction businesses that they qualify under that one and therefore can get money in their pocket. And that one could be up to $26,000 per full-time employee. This is a payroll tax refundable credit. So you get it, you apply in your payroll tax returns. So there's a whole process to go through that and amend those.
Right.
And just like the R&D tax credit, we can do a free incentive analysis to review your qualifications and review the payroll information to determine what's available to a business. So that one's worth pursuing. A couple come to mind. There's a small residential design build company in Massachusetts that has a handful of employees. They're getting $147,000 for the ERC. Now, this is a one and done thing. Pandemic passes by. R&D you could do every single year going forward if you're doing the same kind of work.
Right.
But what a wonderful infusion of cash.
Right.
Another home remodeling company in Washington is getting $58,000 through the ERC. So these are phenomenal tax credits putting real dollars. And these dollars are not, this is a tax refund. Therefore, it itself is not taxable income to a business. And so it's a wonderful opportunity.
Yeah. Yeah. I mean, speaking from, I'm talking to my peers all day, every day. And I would say the example I can give about working through the pandemic is a lot of our sales went up, but it was not a good sales, right? It was a lot of our profitability got beat up really bad, right? Because, prices of lumber, everything went way up. And then the supply chain issue hit, and then we weren't being able to finish jobs, right? I mean, we had materials that were taking 6 months to get to us. So yes, we usually would take that in a month and build it and finish it and be done. Now we were taking it in 6 months, building partial, and then having to come back. So there was all of these ways that our profitability got beat up. And so that's why, it's fine. You guys are so busy. The demand's so great. Easy. It wasn't great. It was like I liken it to being a fireman without a hose. It wasn't a lot of fun. So I can definitely relate to that component of the supply chain really did affect us.
Yeah, I'm grateful that, the government expanded in this way, because revenue doesn't tell the whole story as far as the impact of the pandemic on a business. It certainly can be part of the story, but I work with a lot of businesses that their revenue has actually either stayed steady or increased throughout the pandemic, which is wonderful. But their margins were really, shaved off or cut away. Lead times were horrendous. I'm talking to business owners saying, hey, I had to personally finance purchasing on a job because I just know I'm going to lose the job if I can't get this stuff. So I need to put my own money out there to buy stuff, way in advance before the client even pays, hoping it's all going to work out. But otherwise, I'm not going to get the job. That's a tough place to be in, but that's been the reality these last couple of years.
Right. Yeah. And I think the reason that I think a lot of us don't see these things or get involved is because we do kind of think it's tied to sales, right? And we think, we increase the sales, we're busy, doesn't apply to me. And then you hear IRS and business owner, we don't really like to hang out very much, right? We would rather just keep it very separate and simple. But I mean, these are for a reason, and I do think that we as an industry need to take advantage of these things because we have been beat up in a lot of different ways, and I think a lot of industries have. We're not we're not alone there, but it just feels like we really need to start looking at these because they are designed for our situation.
Yeah, and it's good you mentioned with the relationship with the IRS is so often I have owners telling me or shareholders of businesses, look, I don't want to cause any red flags. I don't want to invite the IRS's scrutiny, and those are valid concerns. Some have PTSD over an audit 10 years ago, which I mean, valid, and even valid skepticism. When you think of government, we don't necessarily think of reliable and trustworthy and have our best interests in mind sometimes, and so, I get it. But these are legitimate tax incentive programs, part of the tax code. If you legitimately qualify and it's done by a business or a firm with the expertise to do it properly, there's nothing to be concerned about. Our tax team has been doing the R&D tax credit for about 17 years.
Okay.
A lot of history with it, worked with thousands of businesses. We have never seen an increase in audit potential for businesses who apply the R&D tax credit. It just doesn't happen. We can never promise no one's going to get audited. That'd be lying if we could. It can be for any number of reasons.
Sure.
That could be far outside of what we're doing. Right. But we've never seen an increase in that. And so this is money, there's been, these are programs created to put more money in pocket, because ultimately, at the end of the day, the government wants to incentivize businesses to be profitable, to expand, to grow, and create jobs and keep jobs in America. That's what this is after, which in turn creates a bigger tax base and comes back to the government, of course. Right. Whatever the motivations are behind it, let's take advantage of it. And the big companies are doing it. Google gets $300-400 million every year in the R&D tax credit.
Right.
Caterpillar gets tens of millions every year for the equipment they design and make.
Right.
Why not get our slice of the pie?
Yeah.
Instead of 5% of small business, I'd rather see majority of small businesses are taking advantage of this.
Yeah, it's such a rich get richer scenario, right? During the Trump era, which was a nightmare, right? It's just you hear about all the ways he took advantage of every single possible tax code he possibly could. And you have a team around you that's looking for everything, picking up every stone. But then the middle class and lower middle class and low class, you're not picking up any of these stones. You
Yeah.
don't have time, you don't have money. It's like you have to spend money to make money in a lot of these scenarios. And yeah, it's just it's tough. And you hear that over and over again. Like, Amazon, you hear about their tax liability. You're like, what? What?
The billions and billions of dollars that are at play here and paying
Right.
such little taxes, like it's just not right.
Right.
And
And
yet,
we're talking about 100,000 here. Come on.
yes, I know. Why are we, squabbling over this little tax bill here? So,
Right.
that's why it's like, hey, these are opportunities to help support small businesses. I mean, they're the backbone of our country. They're keeping families alive and afloat through tough times. And with the way the economy, we don't know what's going on right now and where things are going to turn. A lot of people are really concerned about what's the future of the economy going to be over these next several years.
Right.
And so now's the time to explore, hey, maybe there's some ways, to be able to put some money back pocket, like the ERC, within a year or so, that the opportunity to go back to 2020 and apply for those credits will disappear.
Right.
With the R&D tax credit going back 3 years, every year the previous year drops off. Like, so the bad news I have to tell business owners sometimes, like, hey, I got good news and bad news. Good news, we can get tax, recovery for the last 3 years. Bad news, you've been in business for 10 years and those 7 I can't touch,
Right.
But let's see what we can do now, before we, because every year the previous third year back drops off as the ability to recover money from.
Right.
And we're limited. So let's take advantage of every opportunity.
Yeah, right on. Yeah, before we get to the ending and your contact information, what does the process look like when a client reaches out to you? Kind of give them a little bit of heads up.
Great.
Here's the number one excuse you're going to hear: I'm busy.
Yes.
So break it down to me.
Absolutely. And of course you are. And business owners I talk to are all super busy. And I'm like, hey, our goal is to keep it simple and streamlined as much as possible. Like, obviously, this information we got to get from business owner that we can't make up.
Right.
We got to get everything we need, but we do all the heavy lifting. We try to offer a really turnkey service. So usually it starts with, I just have an introduction call with a business owner just to talk through, the potential of their qualifications, eligibility, and explain the process. And the process is, okay, we're going to have another call where we're going to go through your, kind of discovering your qualifications. For ERC, that's usually about 20, 30 minutes to go through that and go through a qualification questionnaire. For the R&D, it's an hour discovery meeting. We got to go through a robust questionnaire to really get to the nitty gritty of what goes on in the business day in and day out, but it's only an hour. We can do that. In both scenarios, after that, we send you a link to upload the appropriate tax documents. ERC, it's payroll information. R&D, it's tax returns. Once those are received, we produce our free incentive analysis. Usually within a week or two, we come back with that incentive analysis. It's confirming eligibility, and here's about how much is on the table for you. And that is no obligation, no commitment made for your information. Now business owners have put like maybe 2 hours into this whole thing.
Right.
Hour and a half. And if you want to move forward, all we need you to do is now you're actually entering into the agreement. We're contracting you the work.
Right.
The fees vary depending on which tax credit, but it's a contingency fee. Basically, you don't pay us anything unless we can get you money.
Right.
That's how we operate. We will never charge anyone money, for any work we do if they don't get money in their pocket.
Right.
And so it's a pretty simple process after that, and then we take care of the rest and file, and then we wait for the checks to come.
Sweet. I mean, it sounds pretty painless, man. I think you're right. This is a time, in entering into the holiday season, this is a time where we usually have a little moment to breathe. This would be a good time to kind of get some of these affairs in order. And yeah, we have some uncertainty. We're feeling it already in California. Things are changing. So it's time for us to get more organized and take those COVID years and really chalk them up to an anomaly. We're not going to see a lot of what happened again, hopefully. But now we got to pivot back to, hey, here's our new reality. We got to get back in a good position, and that's how I'm feeling personally. So I'm sure there's many that are feeling the same.
Yeah, absolutely.
Awesome. Okay, well, there's one other thing that I wanted to chat about. This push for energy efficiency. We talked about it a little bit: low emissions, electric vehicles, solar. I mean, I live in California, so we're the front of this, right?
Yes.
We have certain things we need to meet and certain goals by whatever 2025, and we have all these things by 2032 and all this. And it's hard for us to understand this as business owners in construction, because this does affect us greatly. and the goalposts are moving all the time. Solar is one of those industries where it's just like there's tax credits, there's not tax credits, there's this, there's that. I mean, there's no way you can keep up, really. So
Yeah, no kidding.
what should we be looking out for, and do you expect the government to take a position in this, because we can't be footing the bill for all of these upgrades?
Yeah, and that is a good point. I talked with a business owner last month. He has in California, industrial contractor, and so they do things in the industrial arena, oil and gas, and so he's wrestling with. We've got large equipment, we got big excavators, all this stuff.
Right.
How do we convert these to electric vehicles? and so he's actually partnering with some big corporations to try to discover how do we retrofit, how do we whatever.
Right.
And there, first of all, I'm like, you're doing a ton of R&D right now, so you're diving into more R&D, so that's going to expand their ability to take advantage of R&D tax credit. But even that's not going to be sufficient. The kind of investment at this level, at a company like that's dealing with large equipment, that's doing the heavy lifting,
right?
The scale is enormous, and his feedback was, I think our politicians didn't think through what it's really going to take for different industries to make these adjustments, in the time frame. And unfortunately, from what we're aware of that's available in incentives and rebates, things like that, they've come and gone. They seem insufficient. I'll say that.
Yeah.
So we're hoping, and I sure hope that as the rubber meets the road and the feedback of the reality of what it's actually doing to businesses to be in compliance with these regulations stuff, that I hope that trickles up to be able to have greater incentives, greater support. Or whatever that might look like. So unfortunately, we're on the front end of a lot of this.
Yeah.
And this guy I was talking to, he's in the middle of it all, and he's even saying, like, we don't know where this is going to, exactly how we're going to do it, exactly what kind of support we're going to get from the government. If we are, a lot of like a solar programs are, those don't go through the kind of work we do with income tax. Those are through the point of sale, which is a tax rebate that can offset purchase. There could be a lot of different programs out there, so they're always worth exploring, and sometimes they're changing. So that's what's so hard is business owners to stay current and constantly doing the research. Like, you just don't have time for that. And that's what makes this really challenging. And I wish there was an easy solution, say like, here's the one-stop shop to get it all. But the truth is, when things are constantly changing, it makes it's a lot of challenges going on. And so that's why with the niche of what we can do, through tax filings and the tax credits that are found on those, like ERC and R&D. There's actually another program that I don't even get into that we do that leverages Section 125 deductions, which are through payroll, that helps businesses save payroll taxes every year. The program that does that. I mean, there's different opportunities that can help a business keep more money in their pocket. That's going to be needed through these big changes that are going on.
Yeah, no, I think you said it right. I mean, I think there a lot of times their intentions may be right in wanting to lower emissions and be good for the environment. I get it. It's tough. It really is tough on not only businesses but homeowners too. When it comes to their utility bills and purchasing solar, should I do it now? Should I wait till next year? Trying to figure out what credits are available. I mean, these are the things that are. It's just it's constantly changing. And yeah, I'm with you. Hopefully, in the next couple of years, there's a little bit more clarity here, because as it is now, there's no way we're meeting these requirements. It's not possible. If it's the same as it is now. So
I hear you. Well, at some point, they're going to be hit with a big dose of reality as we move towards that and see what's realistic and feasible.
Yeah, no doubt. Well, I appreciate you being here. I wanted to finish with a little fun thing we call the zone out.
Sure. Yes.
And so the first question is, as a child, what did you want to be when you grew up?
So, you know what? I was super into technology. I grew up in the 80s and 90s, and first learned to do computer programming on an Apple IIe, the big floppy disk and stuff, and I loved it. Like, it captured me. So I wanted to be a computer programmer, software engineer. And then I remember my family harassed me because in early high school, we went on a family vacation, and on our way out on the road, we stopped by a Barnes and Noble, and my dad's like, everybody could buy a book to take on vacation. They're buying fun novels and stuff. I bought C++ programming for dummies. This thick And I'm sitting by the poolside reading how to code in C++. And my family's just like, who is this kid over here? And I'm like, I'm loving this stuff. Anyway, I did end up going down that route, and but anyway, that was just a unique thing I was into.
All right. Well, you weren't alone there. That's for sure. I mean, and where did the Dummies book go to too? I mean, that's how we got through college when I was of my age. Like you needed to find that the Dummies book so that you didn't
seriously, I love Cliff Notes, man.
Totally. Yes, awesome. All right, then number 2, if you had your own late night talk show, who would you want as your first guest?
And there's so many that I would love to sit down with, but someone that comes to mind, this might be really unique. There is a doctor named Dr. Gabor Mate. I don't know if you've ever heard of him. He's a Canadian-Hungarian physician who has become one of the leading voices in mental health trauma issues in our world today, and written a lot of books and done a lot of studies. And with mental health becoming an increasingly, like, the awareness of it, the understanding of it, the pervasiveness of mental health and those issues, understanding trauma and how it underlies so many medical conditions, like psychological conditions. It's a really big deal. And it's something personally within my own family and our marriage, we've wrestled with issues of mental and emotional health. And he's this fascinating man who's done incredible work. That's kind of on the leading edge. So I've listened to his lectures, read some of his stuff. And he comes out of his grandparents when he was 5 months old, were actually killed in Auschwitz. He grew up in Hungary, and his dad was in a Nazi labor camp. And so the trauma of what they bore, he later was fascinated, but also his own personal wrestlings of, why am I struggling with addiction? Why do I have rage at my children? And realizing there's things that are living in me that I'm not tending to, and our world largely doesn't know what to do with. And so he's doing some incredible work that's really helping set people free. And find healing and freedom from the things that can destroy lives. So he's someone that, like, I would love to just sit down with him and hear his stories and learn from him.
That's going to be a tough answer to ever beat, honestly. I share a lot of your sentiments with mental health in my own family, and we have a couple of things coming out next year on U.S. Construction Zone to help with that issue. It's the big one, and unfortunately, it's not going to get smaller. So we got to tackle it head on. So appreciate that answer. The last one is, who is the most influential person in your life?
You know what? I'm going to be really practical. Nobody influences me day in and day out more than my wife. Her name's Amy Rupple. I love her dearly. One thing I thought in particular, I painted that picture of me poolside reading about computer programming. So, there's a way that I have a tendency to be in my head, disconnected from life, not enjoying life, but thinking about life. And there's a way it creates, like, you're not really present, you're not engaging, you're not enjoying and soaking up living in this beautiful world. And my wife is the opposite. And she's constantly, for the 15 years we've been married and the couple years dating for that, just by her example, by the life that she lives, she's inviting me to get out of my head and taste and see that there's good things out there in this world, from food to, just walks down by a river, to just enjoying versus just stepping back and analyzing. But that's bad. But it can get in the way of actually living. And so my wife is constantly inviting me to live. I appreciate that about her.
Awesome. That's a great answer as well. Well, thank you so much, Justin, for being here. Now, a key component, I will put all this in the show notes here, but how do people get a hold of you? What's that link that they need to go to?
Yes. Probably one of the best ways is, a lot of us use online calendars like Calendly. And so I have a simple, easy to remember Calendly. It's calendly.com/recover-money. Calendly.com/recover-money. And so you go on there, on the top of the page, you'll see my picture. So it's me. You'll see my phone number. You can call or text me, my email, and also the opportunity, if you wanted to schedule an intro call, you can see my calendar, pick a time that's convenient for you. We can get on the phone, have a quick chat about how this might benefit you and see if it's a good fit, and move forward with your free incentive analysis. And I can even just throw it out there, 949-573-4891. That's my cell phone. You are more than welcome to call or text, and I'd love to see how I can help you.
Cool. I appreciate you being here, Justin, and thanks again for all the information. This is going to benefit us greatly. So I can't thank you enough, and we'll be in touch.
Yeah, great to be here with you. Thank you,
All right.
Jeremy.
Thanks, Justin.
All right. Bye.
Wow, great information from Justin Rupple there. I told you guys would get the right information at the right time. Hopefully you guys can take advantage of it, and hopefully it works for you. Like he said in the podcast there, we don't know what the next couple of years is going to bring. Maybe we do head into a recession and it becomes a little bit more painful for us. This is the time to start uncovering those stones and organizing our business to be more efficient and effective and profitable. I mean, these last few years have been really tough on construction business owners and business owners in all industries, unless you're a Google or Amazon, right? Where our margins are getting beat up everywhere you look. It's an increase in lumber or increase in labor or more regulation, more taxes, more whatever. And so it's our time to take that back and be more efficient and profitable as an industry as well. So thank you so much for tuning in, listening. I am your host, Jeremy Owens, and we'll see you next time on In the Zone. Bye.
You've been listening to In the Zone with Jeremy and Valerie Owens. Be sure to subscribe to In the Zone and stay in the know with the best minds in the construction industry. To nominate an innovator or change maker in the construction industry, connect with your management peers, and stay up to date with construction industry news, be sure to visit usconstructionzone.com.